Good morning. It's the Wall Street Weekly Wrap-Up, December 16th, 2023, with your host, John Newquist. Kind of a quiet week with a couple little blips in some stocks, a lot of positioning for the 2024 year, and we'll talk about that. First thing we had is the Consumer Price Index. Pretty good number, I thought, 3.1 versus 3.2 in October. The core is up 4%, so that's not so bad. I was surprised restaurants are still up. I know labor's going up. I know food prices are going up, but Walmart's telling us over 6 weeks ago the prices are coming down for a lot of food, so we should have seen restaurants drop the price a little bit. Gasoline is low, 8.9. That's a nice relief for a lot of millions of people. Oracle was, a good example of these AI wannabes. And I don't want to sit there and beat up Oracle because it's a well-run company. I remember owning it a long time ago, like 23 years ago, and I made 8 times my money on it. So I like Larry Ellison's ability to it, but he was hyping the AI thing on his cloud server, and the only trouble is he didn't have the chips and he didn't have the stuff, and people want it. And last quarter he was talking about how it's going to be great, and this quarter still didn't do anything. Lower earnings, they dropped 11% in a day. So we look at the chart, it's down. It broke a trend line, which you never want to buy a stock. And eventually it'll go down further and further, and eventually, if it does well, it'll come back and get up to that level. But this is the problem with AI. There's companies that make money now, and there's companies that want to make money in 2024, and we got to see other companies do it. And that's all the difference. There's people who are making money now, people who talk about making money, and then there's people who never make money on it. The indicators, the 2-year note and 10-year note, they both dropped. Crude oil still sticking below 80. It's at 71. It got below in the 60s this week. Natural gas, as we predicted, we always said it'll always be below 3. When it got up to 330, it wasn't going to last. This is the coldest time of the year, and natural gas usually peaks at this time. But as crude oil is pumping out 13, million gallons a day, there's a lot of natural gas coming out of those wells, and a point where we're just selling it to Europe at low prices. So it's tough, if you want to sit there and go in it. I'm hoping for a low heating price instead of $400 a month in gas. Gold is still above 2,000, which is surprising because it's been all over the place. And copper, everybody's watching it, $4. So if we take a look at natural gas, we're down since the October highs. We knew it was going to come up there. And the averages, look at the NASDAQ, 40%, boom, 40%. You would have been there in June and you said, well, I made 18%, I'm getting out, I'm going to take my 5% money, or really about half of that, 2.7, in my bonds, and I'll be fine. You'll be fine. You just lost 20%, or I call it almost 2.5 years worth of earnings. That's what you lost. Look at the S&P, it's 22%. It was a 10. You've lost a year's worth of earnings by getting into the bonds. So it's not good. And everything's running up. Look at this, QQQs. I mean, it's just, it's every chart that you want is what you call a bullish chart. You want to buy the stocks when they break out. You don't want to buy the stocks when they break down. Again, 2024 is my year of the commercial office space crashes. I go by Chicago and other cities. The retail just sits there. They can't fill it. The ones who are doing good are all right, but who's losing the money? Well, people aren't going to build new buildings if you got a lot of them vacant. Financial institutions are getting stuck. We have San Francisco companies just walking away and just say, take the building. Just take the building. Could you imagine walking away from your house and say, just take my house, I don't have any money, it's underwater? And of course the retail sector, if they're depending on a big downtown vibrancy, there's people working at home, and that's like an 8% pay raise, somebody was saying on the internet, which I would believe. I would definitely take a cut in pay to work at home 3 days a week, because you don't have to deal with the stress, the traffic, and you save hours of your time and commute. And again, hospitality, you're coming down to Chicago and half the stuff is closed. Wow, that's not good. And then local governments, retail sales tax, commercial sales tax, property taxes are all going to take a hit. So it's going to ping pong. A lot of people junking in financials. You better make sure they don't own a lot of retail. That's all I can tell you. And it's a tough sector, but that's the sector we see a lot of the areas. San Francisco, it's up there, Seattle, Chicago, but we'll see other cities start to see the same thing. And some commodities, if you want to look at them, I mean, we talked about, wow, okay, highs of September, oil's $95, sugar, look at it, going up super high, and then the market just dropped. You remember, we're seeing a slowdown. They don't want to talk about it, but it's easier to hire now, and a lot of commodities have gone down. So this is why the restaurants should not be at 5% higher. They should be lowering the prices. Let's take a look at Pfizer. It's nonstop. Less COVID revenues every quarter. Oh my God, this thing is paying 5.9. I would get into it for the 5.9 dividend, but are they going to keep it? You don't want to be holding the stock and they drop the dividend to like 1%. Or cut it completely like AT&T way back when did, and it was worth a 2/3 drop then. So I always tell people, the chart's telling you it's sucking, don't go into Pfizer. You want to try to catch the low, let it baseline a while. You may not get the low, but geez, you don't have to deal with another collapse. Because if you bought the low over here, you lost money. You bought the low over here, you lost money. You bought this low, you're down. And that's what you don't want in a stock. Down tending. If it was going in a slower slope, you might want to say, I'll put up with it. But man, this is not good. This is what you call a horrible chart. Very similar to what we saw in Oracle. JP Morgan, just flip it upside down. That's all you're doing. Taking a Pfizer chart, flipping it upside down. Financials have been tough this year, and everybody's starting to think, okay, what will beat financials? Well, industrials will, financials will, but again, office space is going to affect financial a lot for the smaller regional banks. Anybody who owns a lot. JP Morgan's so big and so diversified, I'm not worried about it. It's been our key portfolio for financials forever. Look at it, new high, new 52-week high. It's in a nice slow uptrend. And people said, well, do you want to buy it now? I says, well, you might want to sit there. It's pretty high. When you get this kind of divergence from the, the trend line, then you might want to say it'll come back down. Maybe when it gets down to this level, nip at it. But otherwise, if you want some, buy 20% of it now. If you're going to allocate so much money, buy 20% of it, and at least you're in JP Morgan. And if there's dips, then you can buy, and you can say, well, okay, I got a plan. But I wouldn't be buying it at this price. I'd ease into it, as I call it. And that's what you're looking for. Google, holy smokes, they got the Epic software decision against them, and and everybody's all excited about it. Okay. But it's just one of many parts of their revenue. I'm not too worried about it. The trend line's still intact. They got a double top that it seemed to can't break. I would actually say it's a triple. 1, 2, 3. But, Google's going to be around. We got AI. I get on Google now and I do the search, and I got AI searches and stuff. Gives you some interesting information. It can do stuff that it couldn't do a year ago. So I think Google's doing well. The search is integrated, and it's going to be better. And again, we're underweight nothing. We're fully invested, and we're overweight, the tech and the communication and consumer discretionary stocks. But look at the top, market cap stocks, and overall a lot of greens. And again, people are saying, oh man, when are we going to buy Nvidia? Well, ease into it. Buy some every month. 5-month plan, you buy 20% for 5 months. You'll get some low parts, you'll get some high parts, but the idea is you're going to be in it. Healthcare, everybody's watching it. A lot of things with United Healthcare, but we started looking at, okay, we got Microsoft, we got Google, we got Amazon, we got Nvidia, we got Facebook, we got Tesla, we got Taiwan Semiconductor, JP Morgan, Walmart, ExxonMobil. Bigger companies, better performance, market leaders. That's what we want in our portfolio, the best of the sectors. And that's what we'll do. And I'll see you next week. Stay warm, and I hope you have a good week.